Hey traders from around the world, what's going on? It's Ricky Cadan with another Thirsty Thursday real life stock review. I say thirsty because there is a few people out there that would be able to buy just a few extra martinis, maybe a few more protein shakes for this week, as there was some gainage to be made today. The SPY retest gap, gapping up. Now this wick is actually wrong data. If you take a look at the 5 minute, you see throughout the day, intraday, that wick did not actually happen. It actually happened pre-market. However, speaking of the 5 minute, what we've taught at Real Life Trading is this 5 minute high wave candle strategy. And there would have been a lot of real life traders that seen this opportunity and made some beautiful gainage on it today with an entry and a stop below the first 5 minute high wave candle. You can see that was just an absolute glorious gain there, and we slowly grinded higher. Take a look at the E-minis, and on the daily chart, I have been saying for the last few reviews, probably since this day right here, I said that we are starting to see the bull step in after all this volume came in here. So if you did take that analysis and maybe buy some calls, or maybe flip your switch, because a lot of people were thinking that it's time to go bearish again, as we were channeling here. But yeah, volume does not lie, and we definitely did start to grind higher. So the E-minis after hours right now is slowly grinding higher. Right now, as we speak, we are just above this resistance level here. So if we do get a small pullback, that makes a little bit of sense, and we most likely should continue, unless old Jay Powell will bring down the markets, or old Mr. Trumpy. Who knows? But anyway, let's take a look at the Dow Jones. So Dow Jones, big retest gap today. And right now, I did say that we need to close above this level, which we have. But it just makes a lot of sense to pull back, as right now we are at this particular resistance level right now. And the Qs also doing the same thing, gapping up, retest gap. Most of the market did move higher today, guys. The IWM just not as strong as the rest of the indexes, but we are still staying above this 146.80 support level here. So we did run into the 200 on the daily chart, and we did slowly sell off. However, we did get some beautiful volume coming in on the IWM. So hopefully we do continue. We do have a few risk events tomorrow. Obviously, we got Mr. Powell speaking again, and we've also got the non-farm payrolls as well, and a few others. So probably going to be very quiet at the open on Friday, but most likely once everything is all on the table, we'll be able to see which direction we will head. Let's take a look at some stocks. MU just making a new yearly high, which is good to see, and beautiful volume at that. We do have earnings coming up at the end of September. I'm not overly fussed about that. I do think that we will go higher. If we do gap down, it will just be a buyable event. So keep your eyes on MU for a buy the dip opportunity in the future. Here is Under Armour, and a lot of real life traders making some gainage on some call options with our weekly options newsletter. That did get sent out at the start of the week, and a lot of people are very happy to see Under Armour going higher. So take a look at the weekly chart. We are currently at the 100 on the weekly. Will be a little bit of resistance. However, this is an absolute solid support level. So most likely we'll crush through the 100 and go higher. Let's take a look at IT Gartner. And right now on the weekly chart, this is a really, really healthy trend with a beautiful pullback. So right now we did have a 25% pullback, and on the daily we did coil here for quite some time obviously, with the rest of the markets, and we are starting to break higher. Not a great deal of volume coming in. So if you are going to be stepping into this as a long-term opportunity trade, I would just be looking to buy a dip of some sort, as we did get a little bit of an upper wick, and this is a retest gap. So I would look to kind of buy the dip, probably around 133. That looks really, really nice. Now, if you have been watching my reviews and taking some of these trades, guys, I did say just a few weeks ago that AMAT was coiling and getting ready for a bounce back here. So if you did take that analysis, maybe buy some calls or get into some shares or what have you, some naked puts, whatever it was. I hope you guys are making some gainage. AMAT coming straight into this resistance level right here and having a massive upper wick. So obviously there will be some selling, a lot of absorption up here, a lot of people just taking their profits, and there's a lot of big volume here. So I do expect a little bit of a pullback, close this gap, and then we'll see from there. Hopefully we trade higher. And if you did watch my review on Tuesday, you would have known exactly what to do on Wednesday morning. Take a look at pizza. Now everyone loves pizza. Okay, Domino's Pizza. I did say in my last review, if you were looking for a trade to go long, an entry above here with a stop below here would suffice, would be absolutely amazing. And on Wednesday, that did trigger and it did go higher. So well done to all of you who did choose to take that trade. Volume is tapering off a little bit. So I do expect this to slow down just a smidge, but overall, depending on how long you're planning on holding for, it definitely looks good to stay long. Let's take a look at the All Ords, and I did mention back here that we were going higher. So if you did get into some long positions, then well done to you guys. I do hope that we get back up to these all-time highs. At this current moment, it does look like we will. Obviously, just waiting for all the news to come out at the end of this week and see how we transpire in the market. Take a look at the banks, CBA. CBA just doing what it does, just going back up again, going higher. Not a lot to really speak about with this one. Just always look to buy the dip. We did get an amazing pullback back here and back here as well. So if you were buying these dips, then well done to you guys. And APT, a lot of people actually getting trapped. This is just a huge run up. I am not looking to get in bullish here. I did have a look at another forum, and a lot of people telling everyone to get in short right back here. I don't know what analysis they were looking at, but it was still bullish, especially with all this volume here. A lot of people getting trapped and just having to buy to close their positions. So a lot of people getting squeezed out of their trades, but most likely, as we have had a very, very big run up of, 44%, and that's only in the last week and a half, 2 weeks. So pretty intense, pretty amazing. Not a sustainable trend. I do expect us to pull back. If you are looking for a long-term opportunity, probably look to buy on a dip at about $28. That should bring the 100 simple moving average into play and help us stay above that. So APT, just look to take profits, guys. Don't try to pick the top. APX, another one that I said was just about to crack and go higher, and we are slowly coming into a little bit of resistance on the 100, but beautiful volume here. I do expect us to push higher. Weekly trend does look good. We're getting in, we're finishing this week with a very nice long lower shadow, so I do expect us to most likely move higher. And here's BHP. BHP just chopping around down here. I did say that most likely we will consolidate for a little while. Makes the most sense. And yeah, definitely makes the most sense, guys. So obviously just look to buy as low as you can here and yeah, you can play a channel, of course, but if you are looking to buy, just know the 100 simple moving average is here to help support your trade. So that is also going to give you a little bit more confidence getting in. Speaking of commodities, let's have a look at the gold now. Gold is just keeps headbutting its head against this resistance. If the 1549.56, guys, if you did not draw that on your chart, you probably should have, because that was the place to take profits or go short. Take a look at the daily. We did get a nice little double top pattern at those levels, and right now I do expect us probably to pull back, probably down to at least 1500, and then we'll see where we go. If we do pull back a little bit further, the 1461 is going to be a nice buy the dip opportunity on gold, but we'll see how we travel, see what the markets do. It will can surprise us at times, but gold is definitely slowing down after this massive bullish run that we have had. Let's take a look at crude oil. Now, crude finally did break out of this amazing trend, this amazing wedge that we had here. I did say that most likely we will come back to the 100 on the daily chart. So that was a target for me and a lot of other people. That's just based off this previous high here, and obviously just a long-term moving average is generally a very large target. We did get some beautiful volume coming in yesterday, and right now we're still above the 200. So uh, I do expect us to stay out of this wedge now. I would probably still stay bullish on oil if you are in bullish, and if you didn't take your profits here, probably look to take your profits here if you are still in and you held through this bit of a quick spike. But yeah, crude oil looks like it's going to start going higher and breaking out. I hope this is not just a fake out of this descending wedge, but I guess the next couple of days we will definitely see. And last but not least, we'll take a look at the Aussie dollar. A lot of people getting into some long positions back down here. I can see why. However, if you are in long, make sure you look to move your targets to about the 100 simple moving average on the daily, which is at 69.12 US cents. So yeah, Aussie dollar does look surprisingly a little bit strong. We are at this resistance level right here at 68.22, but by the looks of it, we probably will break through that level. And if we do get up to these highs, guys, once again, just probably look to get in short, either at the 100 or at the 200 simple moving average. Anyway, guys, that's it for me for this week. Actually, I do have one request from a trader. They did want me to look at Square. Sorry, Matt. I will quickly have a look at that for you. So Square, most of the markets did start to bounce yesterday, and we did get a really nice gap and go. As you can see on the weekly chart, we are throwing in some beautiful long lower shadows at the 100 simple moving average on the weekly chart. So if we can break above this high around 66, obviously we are just going to probably shoot straight back up to 80. But most likely, if we can have a very strong closing week, that will help us move higher next week. We don't have that higher volume, but the selling at this point does look to have left the building for now. And on the daily chart, I have heard a lot of people saying this is a little bit of a descending wedge. I can agree with that, but we are getting some beautiful volume coming in here. So I am actually very bullish on Square. I am in a position on Square long. So yeah, Square does look like we should be bouncing. All right, guys, that's it for me. I'll be back next week on Tuesday. If you want me to review any stocks, tickers, pairs, or commodities, leave it in the comment section below, and I will get to that on Tuesday next week. I'm out of here. Have a great weekend, and remember, love life, live life, and trade it. I'll see you all soon.